Welcome to Inderes TV. In this video we are going to talk about Savosolar with Analyst Pauli Lohi. Hi Pauli.
Hi.
Could you start by telling us what Savosolar does?
Well, Savosolar is a company that consists of two different business areas, renewable energy and marine logistics. And one aspect that is common for both is that reducing carbon emissions is increasingly becoming a competitive factor among these both industries. The renewable energy is the one business that has been always in Savosolar since the company listed and so on. That business consists of producing solar thermal collectors and making solar heat systems. Then marine logistics is they operate 14 vessels of I think 5 there of their own, and the remainder are time chartered, and they operate in the Baltic Sea and the North Sea. These two companies combined in November last year, and the majority ownership of the company transferred to the founder of this marine logistics business, which came as a new business area to the group. So Meriaura Invest owns majority of Savosolar, and the founder of Meriaura, Jussi Mälkiä, owns majority of the Meriaura Invest. So the ownership base also changed a lot when they joined forces last year.
Let's take a closer look at these business units. If we start with renewable energy, it has been making significant losses for years. So what does the future look like for this business unit?
Well, if I start with some basics of the renewable energy, so they produce solar thermal collectors. So they are like solar panels that produce heat, and those are produced in Mikkeli factory. The factory has capacity for some 25 to 30 million revenue, according to the company. It's a quite project-based business, and usually the projects are of size of more than 1 million euros, and there's quite long sales funnels or negotiations. So it depends a lot. Like some year you have bigger projects, and some year you don't have so much big projects. So the sales has varied in the past. France and Denmark are the major end markets, and it has been quite a low gross margin business in the past. So of course their sales has also been quite low, around 5 million or so in the last year. So they need more scale to improve the profitability of this business. But what we have seen that the revenue has not been growing consistently, but it has varied. Of course there has been turbulence in the market, like COVID and also this rising interest rates and uncertainty around energy that has postponed some customer decisions in last years. But in the long run, I think there is drivers that will drive the growth of this business, especially the decarbonization of economy. So heating buildings will become it will be part of the EU emissions trading scheme. So then it becomes more costly to produce heat with traditional ways. So then solar heat and other renewable heat production solutions will become more competitive. Well, solar heat is typically not the primary source of the heat, but it is used together with like a traditional oil or gas or biomass power plant. So but it helps the customer to use less fuel and save from the costs and also reduce emissions. Well, in the past the company has been building mostly collectors, but in the future they would also like to make more comprehensive systems and take the whole project responsibility on themselves, so they can get more revenue, maybe do them better themselves and get better margins. But of course the risk level also increases that way. And they also are planning maybe in the future to combine other energy production sources than the solar heat. So they want to become more comprehensive heat system provider.
Then the profitability of marine logistics is currently at a good level, but on the other hand, the market is cyclical. So is it to be expected that the profitability in this business unit will also be corrected downwards in the future?
Well, it is possible. The marine logistics is very cyclical business, and of course, maybe in the Baltic Sea, it's not that much as in other places in the world, but still, it's cyclical. If we look to the business mix, 2/3 of it is bulk, which is pretty cyclical, and of course there is some. Majority of the revenue is coming from longer term contracts like 1 year or so, maybe more sometimes, but those prices will also adjust over time, and it is likely that the current very strong profitability will not last in the marine logistics over long term. The EBIT margin has been somewhere around 5% in the past. Now it was almost 14% last year, and I estimate that will decline more close towards 9% over long term. So I assume that they can improve their profitability compared to the history. They have improved their efficiency, optimized logistics, and got I think better fleet mix also. So that will help in that, but the current levels are not like what one should expect for long term. However, of course, if you think about the growth opportunities of this business, 1/3 of the revenue is coming from project cargo, and that will benefit from large infrastructure projects like wind power projects, especially from the offshore wind, and that's one driver for the business. Also, reducing carbon emissions will become more important competitive factor in this industry, since marine logistics is also becoming part of the emissions trading scheme, and Meriaura has been doing work for reducing emissions, for example by using biofuel, and they are also planning for other new low carbon ships, so vessels. So they have, I think they're quite well positioned when the ETS starts from 2024 onwards.
Yeah, there was a significant change in the structure of the company last year when Savosolar and Meriaura merged. So what are the reasons for this merger, and are there any synergies to be achieved?
Well, these two businesses, they are in different industries, so we don't see clear operational synergies between these two businesses, at least yet. The company has not published very specific strategy so far. There could be, of course, something operational joint projects on the drawing board that we are not yet. We don't know yet those, and maybe company could publish some more information of the strategy of this company in the future. But I see, however, some financial synergies in a sense that Savosolar, the renewable energy business, has been needing more cash and stronger balance sheet to be part of these more comprehensive projects. So the stronger balance sheet will help in that and help them grow and maybe improve even profitability in the future. Then marine logistics, it benefits from the listed share, so they can use it for acquisitions and so consolidate the fragmented shipping industry.
The merger with Meriaura also had an impact on the balance sheet, which is now much stronger than before. But I guess there is still no point in expecting a dividend.
Well, yes, as you said, balance sheet is quite good. So net debt to EBITDA is below 2, which is quite a decent level, even if the profitability of the marine logistics is currently in a, let's say, elevated level. Well, the company hasn't given any financial targets yet, or it didn't pay any dividend from last year. So our assumption is that the funds will be used for growth rather than dividend. Balance sheet should allow for moderate growth investments for the company, and I believe that if there will be any major investments, those will be in the marine logistics fleet. So they are, I believe they could buy either other companies and so acquire some used fleet, or they could buy some like new low carbon vessels. So I think those are the most likely targets for the capital.
Finally, let's talk about valuation. We started the coverage of Savosolar with sell recommendation and target price of 6 cents. So could you give us your thoughts on the valuation?
Yes, so we have used some of the parts valuation for Savosolar because it consists of two very different businesses. The renewable energy is currently, it could be a potential growth business, but currently it's highly loss-making, and then the marine logistics business is very capital intensive and also cyclical, so two very different pieces. We have given renewable energy zero value in this sum of the parts. There is different scenarios. I can talk those through soon. Then value of marine logistics we have assessed is 54 million euros, and that assumes 9% long-term EBIT and normalized valuation level of EV/EBIT 9, which is pretty close to the medium-term valuation of the peer companies. And this valuation for the marine logistics would correspond to fair value per fleet value to 1.1. So it's like PP 1.1, which is pretty close to the industry average around 1. So I see that fair for that, and together this with 7 million net debt, the market cap would be 38 million euros, which is around 5 euro cents or 0.54 Swedish kronas. So we are a bit below current share price, and well, the major swing factor is coming from the renewable energy, because it is quite difficult to predict where the profitability will go. There's different scenarios. Our base scenario assumes that it still continues to be loss-making in the, let's say, following 4 years or 5, but then it will turn itself for profit, and the future profits could like offset the present losses. But yeah, it's difficult to say. Then in the negative scenario, it could be loss-making for years, and then the company could decide that okay, this is not anymore what we like to do if we cannot turn this for profit. And then the bull scenario that could result in positive EBIT, let's say in 4 years, but it would require the revenue to tenfold or even more. So the current factory wouldn't even be enough for this scenario, but they should expand the capacity. But the major thing is that they should get more sales. Of course, there's long-term drivers that drive the sales, but we should see much more consistent and better growth than we are currently seeing to believe that this bull scenario could come through. So we see that unlikely at the moment, and stick to our base scenario, which assumes zero value for the renewable energy. Well, the current share price, it gives some value to the renewable energy, and we don't. So that's why we are basically below our target price is below the share price. Well, of course, in addition to the renewable energy, a lot will depend on how marine logistics profitability will develop in the short term. I think there could be positive surprises in the marine logistics side, and maybe the market won't normalize as fast as we assume. We assume like it will take 2 years to normalize, but we don't know if it takes even longer. But growing in this marine logistics side over long term, that will require a lot of investments, and there's some uncertainty, of course, where the profitability will settle over long term. So we think that sticking to the peer group valuation multiples is a good option for the marine logistics, and with this assessment we find that we don't find the company currently as a good investment case.
Great. That's all for now. Thanks for your comments, Pauli. Thanks for watching this video. Have a nice week, read the research, and make good stock picks. Bye.